This is my first industrial property that I bought and I just sold it. I'm going to break down exactly how I achieved more than 100% ROI for this investment in just 4 years' time. I have a total of 9 investment properties and this is the first one I'm selling after 4 years. So I'm going to be as transparent as I can, showing you all the expenses that I have paid for this property. So let's see the calculations. Let's go. Now I've already written here, this is the first unit. Tradehub 21 is an industrial unit. This was the purchase price 778,888 and the sale price is 830k. Alright, so from here, you're able to calculate the capital appreciation already. Alright, but we'll get to that again. To acquire the property, we have to look at the cost of investment. First of all, we were very lucky to get a 10% down payment. So how much was the 10% down payment? It was 77k888.80. Okay. Other than that, there's also a stamp fee that we have to pay to the government. That's a stamp duty. So this is like that one. Okay. We have to incorporate the company just to use a company structure to buy. We have to get a corporate secretary to do the accounts for us. And then we had a one-time fee of a GST registration. And lastly, to get a bank loan, there was a bank loan fee or bank facility fee, all like that. So the total cost of investment was actually 97,004.80. So these are the amount of money just to get started. But actually not true, because along the way there are other costs. So for example, when we want to claim the GST, we got to pay $200. And then there's a yearly company filing, that's 3,008. There's also some government rules. Then when we get a rental, we have to pay the agent commission to get our tenant. There was a sale commission, right? By selling the property, the sale commission was 16,600. Now you may be wondering, these two need to pay GST or not? Because as you know, if your business is registered with GST, any goods and services that you purchase don't need to pay GST, right? So these two don't need to pay GST. Yeah. We also have monthly expenses. Okay. So what are some of the monthly expenses? Now, it includes the maintenance fee of the building, so that's about 210 monthly. There's also a property tax, which is about 268.33 monthly. Alright, and the mortgage, okay, as of now, I think it's 2,501.19. These are the monthly expenses that we will use a tenant's rent to cover. So the tenant's rent, just to give you a gauge, it did change. So at some point in time, it was 4,000. Okay? At some point in time, it became 4,003. At some point in time, it also became $0. Why? Because the tenant went bust. So if you watch my previous video, right, the tenant changed 4 times for this unit. And definitely there were months where we didn't have a tenant in between. Alright, and we also spend money for renovation and everything, right, which ate into the cash flow. If we took 4,003, definitely we will be able to pay for all these expenses. Even 4,000 also can pay for all these expenses, right? But when we have 0, then obviously we have to pay it for ourselves. So all in all, over the 4 years of holding the property, when I add up, sometimes no money left, the cash flow over the last 4 years was, okay, total 46k 819.2. Now, next thing, the tenant also paid the principal for us, which means the tenant actually helped us to clear the loan or pay down the loan, and the tenant actually helped us to pay 59k 745.69 worth of loan. So you just need to check with your banker how much was being paid. Lastly, capital appreciation is this minus this. So I'll put a number 3 here. Your capital appreciation, you can calculate for yourself. That is actually 51k 112. All in all, what are my total profits? My total profits here will be 157, okay, 676.89. However, my total profits, is it for me to keep? Obviously no. Because what I want to know is, after minusing all these expenses, what is my net profit? Alright, so I'm just going to put it here. Net profit. Okay, my net profit is actually the total profit minus total expenses. So my total profit is here, already written already. This is my total profit. Okay, what is my total expenses? My total expenses is actually 44k 866. How did I get this 44k 866? Very simple. What are my expenses? this, and this. For example, I pay the government stamp duty, it's an expense. Once I pay, I'll never get it back again. Alright, same thing for all these incorporation or whatever, it's all paid and never going to get back. I don't count down payment as an expense because once I sell, I'm going to get it back. So all together, once you add it up, you will get this. So what is my net profit here? I'm just going to box it up here. What's my net profit here? Once you minus that, equals to 112,810.89. Now, what I want to know is how much did my money work for me? What is my ROI? How hard the money has been working for me? So ROI here, just like when you go for other investments, they'll tell you how many percent you make per year, right? So ROI, very simple, it's my net profits divided by my cost of investment. Once again, this is my cost of investment. I had to pay this money to acquire the property. So this is cost of investment. What is my net profit? This is my net profit. So basically is this one here divided by this one here. Okay, all in all, what did I get? I got 116%. 116%, wow, over 4 years. So if you divide it by 4 years of holding the property, it works out to 29% per year. All the costs factored in as much as I can. Sometimes there was no cash flow, sometimes I had to pay for renovation and everything. Sometimes we still have so many costs that we need to pay. And of course we still have to pay agent fee to sell the place. But end of the day, we got 29%. I think it's a very, very good results. And of course, this is possible, once again, possible because of the very nice thing that we only had to pay 10% down payment. Of course, COVID also gave us a boost that we are able to sell at a pretty decent capital appreciation. So a lot of times, I see a lot of very negative comments like, going to be bankrupt, there's a lot of cost, over leveraging, over stretch, alright? But I think that's also because people don't know how to calculate and don't know how to see the profits. I hope this transparent calculation will actually let you know and let you have the confidence that, hey, we're getting very good profits here. And this is close to 30%, right? Even I think 10%, it's already more than what a lot of other instruments are giving, right? This is 3 times more than 10%.
Looking at this behind the scenes calculation, it was actually very intimidating when I saw it for the first time. I had to reread just to make myself more comfortable, and I had to break through my mental mind block to see that this is even possible. And all these things, right, are not by luck. So if you want to find out more about my other properties and how they perform, do follow me and I'll share with you more of these behind the scenes calculations.